Investors and traders, welcome to the channel Market Chat Pattern. Today is 7th of September 2024. I hope everyone is having a great weekend or the start to their weekend. In this video, we will be taking a look at the key US markets. We will be mainly covering the bond markets, the dollar index, and a little bit of gold market. This way we'll have more time in our Sunday video to cover the stock indices and look at some of the sectors as well. So as always, this video is for educational purposes only and it's not a financial advice. So I'll start by taking a look at our timing model for the new subscribers and the new viewers who are looking at our analysis for the first time. This model has a really good and uncanny ability to pick turns in the market, and most recently we had been watching for 29th August to 3rd of September window for quite some time. In fact, we have this predicted date a few months in advance, as the long-time subscribers will know, and we have seen for starting from 3rd of September, quite a lot of volatility coming into the market, and the market has been moving lower. Now, the next key date that is coming up is next week. It's 10th of September, and with timing, we need to give it 1 to 2 trading days on either side of it. So just keep this one in your books, the 10th of September next week. Now, a quick look on the Japanese market Nikkei. And here we have this timing as well. In fact, longer cycle. You can see this ABCD. It's just basically the one-to-one projections that we use on the price axis. This one is on the time axis. So we got a date of 5th of September on this index, and then the next one we are getting is the 19th of September. So just keep a note of these. Last Friday we had some economic data come out, and here we go. I need to make it the 6th of September. Here we go. So we had the non-farm payroll data come out, and also we had the unemployment rate. And one of the things is that in terms of the jobs creation, it was much lower than what was expected or forecast, which was 164,000, and we had only 142,000 come in. Now, what is most important is this revision to the previous data, which is about it was revised down by 89,000. So these numbers, they always get revised, and usually they are revised to the downside. So it's not really possible to trust this data anymore, in my opinion. But this was one of the reasons, because it has sparked a concern that the economy is slowing down quicker than what was anticipated, and the unemployment rate is actually also ticking higher. What it also means is that it is bringing that Federal Reserve will actually lower the interest rates, but on the other hand, you also have the concern that actually the economy is weakening and decelerating quite quickly. So it's an interesting scenario where we stand with this, and this economic data is going to be much more important moving forward, because it is likely to determine what the market is expecting in terms of the rate cut, how big the rate cut could be. Now let's move on to the chart of the Japanese yen. This is a really important chart, and I think some of the volatility that we are seeing is actually linked to the Japanese currency because of the carry trade. So 11th of July, which is when we had the inflation data come out, this is when this move actually also started, and that's when we also saw a peak in such an index such as NASDAQ, and actually a deceleration of the move. And this, in my opinion, the currency market is actually a crash. Now, the currency markets are much bigger. The biggest volume traded is, in terms of total volume, 7 to 8 trillion traded on a daily basis, roughly estimated. And then the biggest currency pair is the Euro USD, followed by the Japanese yen versus the US dollar, and then the cable, which is the Great British Pound. So to have this market decelerate this much in quite a small amount of time, about a month's time, a few weeks, in fact 3 weeks time, it is a crash in the currency markets. Now, the market actually retraced right to the 38.2% retracement, which is, in stronger trending moves is the kind of strong resistance or support depending on the direction of the move. And what it has done now is it has actually really retesting the lows of 5th of August. And here, this is really important. If this low is taken to the downside, we could have a deceleration in this, meaning that the Japanese yen is actually getting stronger, which is likely to put more pressure, especially on the growth stocks, is tech stocks. So really important to watch this. This could also possibly be a potential double bottom as well, and we could see more trading range behavior come in, and that should, in my opinion, alleviate some of the pressures that we have seen in the stock indices when it comes to equities in the US market. And also we have the some timing coming in next week, so that could actually potentially mark some sort of a potential shorter term bottom in the market, and we could see some selling pressure actually dissipate from the marketplace. Now let's take a look at the dollar index itself. Here we go. So dollar has actually completed our patterns, and now it is finding some support from the structures right here, and there's a possibility, and there's a real possibility for this, that the dollar could actually strengthen quite a bit from where it is. And the key for us will be actually this 101 or 102 level. So right now this bearish symmetry is still in place, because all these moves you can see, these are of equal magnitude, and the market has actually found resistance from these levels, but last Friday's move is actually kind of potential double bottom kind of a move here. It's not fully confirmed yet, but what is possible is that the market could retrace up to 50% of this entire trading range, so which could actually bring it up to 103.40 level. So that's going to be a possible region to take a look at, and so it's going to be right around here. 103.30, 103.40, that's the kind of region I'm looking at. Now let's take a look at this on the weekly chart. So here you can see that we had a week which was basically, it took out the highs of the previous week, so that's important. It's not an inside bar, but all these charts bars remain inside this candle of 19th of August. So it's basically essentially a trading range behavior, and since it actually really got down to the kind of the levels we were expecting, I would have really liked it to see move into this gap around here, this gray region. It hasn't done that yet, but you can see this little line around here, so there is a possibility of good support. So we'll be watching the US dollar possibly getting stronger over the course of next week. Now let's take a look at the bond markets. So really interesting price action happening in the bond markets. This is the 2-year treasury note on the weekly chart, and you can see that it's really it has met our targets. I'll show you that on the daily chart, and it's really in this kind of a pocket, filling in this some little bit of a gap around here. Either it could quickly decelerate, so we can see the yields moving much lower, and the 200-week moving average comes around 2.88 or nearly 3%, or it just moves in a trading range sideways to slightly higher pattern formation. Now let's take a look at the daily chart. So there we go. So a lot of weakness, well, actually I shouldn't say weakness, but there was a lot of volatility in this last Friday, and ultimately the yields actually moved lower, which was because of the economic data. The Federal Reserve could get actually a little bit more aggressive in their interest rate stance. So it has moved into this gap that we were watching. Well, from here, there's a possibility of some sort of a pullback back into this trading range. So I think we're going to see more of a trading range behavior in this. Now, really interesting is, let me actually move to the 10-year note in the yield formation. Here we go. So look, this one took out the lows of 5th of August by a few ticks, and then it closed unchanged for the day. So really interesting kind of a price behavior taking place, and there is this ABCD as well. Here we go. There we go. So we have to be watching the 10-year and the 30-year long bond futures very carefully next week, because they're at a point where we could see, because of this pattern formation, the market just taking a little bit lower and closing back into the range, where we could actually see the yields pick up to the upside, or at least we could see some sort of a trading range behavior. Now this is more easily seen in the futures chart on the 10-year on the price axis. So there you go. That's where we have the big ABCD completed. Last Friday, it actually took the point D out, which means that we have the potential to actually move higher, so lower yields, potentially go up to 117 on the daily chart. But it also means that actually the way it closed in the middle, we could see some sort of a pullback taking place as well. So it's going to be, I think it's going to be a price action, which the kind of price action that I want to see, because I think we are moving more towards a trading range behavior for a few days, weeks, before the market finds its direction, which I think is to the upside, but we'll have to wait and see. Then on the weekly chart, here we go. You can see that the weekly candle actually closed pretty strong, so that's good. And then ultimately it's got a chance to actually go and tackle these highs from March of 2023, and finally I would really like it to move to around 118, because that's the 38.2% retracement, and that's where we're going to find out whether the market has more legs to the upside, or this move is actually a bear a move, or a corrective move in a bear market. So we're really carefully watching this one. Let's move on and take a look at the long bond futures. So the long bond futures, I think we are in this ABCD, so which is around 131. It's been in a trading range behavior for quite some time on the weekly chart. Now the interesting thing is, which the 10-year did, but the 30-year did not do. So the 10-year was able to take out the highs of the 5th of August by tiny amount. So let me actually go back to the daily chart and show you this. It has quite a lot of significance in the price action. So here we go. On the 5th of August, the high was 126 and 27 seconds. And last Friday, we had 126 and 26 seconds. So it missed it by one tick. So it did not confirm a new trend. Whereas on the 10-year Treasury note, you can see that the 5th of August high was taken out. Now, what it means is that the yields on the 10-year were actually lower, and on the 30-year higher, which is kind of expected. So the yield curve is actually de-inverting, and it's kind of going back into its rising shape, the kind of shape which is normal. And this kind of behavior normally takes place before recessions really manifest, because the yield curve inverts and then it de-inverts, and after some time we have the news of recessions getting confirmed. So whether this time it's going to be different or not, we'll find out. But normally the data is lagging, and we find out the department which is responsible for officially announcing recessions, it always comes back and say, okay, the recession might have started 3 months ago, 6 months ago, and then a few months later they come back and do another revision. Okay, we think now, because we've got more data and data is lagging, and because of that, okay, might have done that. Now some recession indicators which I've spoken about in previous videos, such as the SAM rule, they have actually been flashing recession signals for quite some time now. So that possibility remains there. Whether it will get officially announced, or whether we are already in a recession, we'll have to wait and see. But what is evident to us is that the yield curve is kind of moving or de-inverting. So that is something we need to make a note of. Now, last but not least, let's take a look at the gold market. Here we go. And here we go. So the gold is resilient. It's just been really strong in 2024, but it's just gone sideways. I believe this 2,556 is pretty strong resistance. The upside, in my opinion, is limited to around 2,700 for this leg because of the because of this. Let me actually move it from the away from the log scale. Here we go. This is the long term, so 2,700, and I think after that we could see a few $100 move, corrective move in the gold. So slowly but surely seems to be moving in that direction. Now, one of the things about the gold is, of course, there is a story about inflation, that it's an inflation hedge and stuff like that. But the reality is, we have had really strong inflation, but the gold really started to move in 2024, and something which actually changed was the Basel III rules, where based on the rules, and you can check this in more details on Google, central banks can actually have gold, or the banks can actually have gold as an asset on their balance sheets, which means that they can actually borrow or lend against it. And that has actually changed quite a lot of things, and this is why we have seen one of the possible reasons that we have seen such a fantastic rally in gold in 2024. And of course, there's geopolitical turmoil, and then of course there is this some part of inflation to it, but there's another bigger story, and that is the impact of de-dollarization. So you have these BRICS nations, they have actually that's why we see the Bank of China buying a lot of gold, some of the other central banks buying a lot of gold. So that's kind of a movement away from dollar. I don't think it's going to happen that quickly, but that sort of thought does exist, and it looks like some bigger forces are actually preparing for it, and this is one of the reasons why we see the gold really strong. In fact, one of the best performing classes in 2024. Now, while we are at it, let's take a look at the Bitcoin. Here we go. And I have to shift to the log scale. So this is the Lucas time spiral that I've been following. And it's got a remarkable history. These peaks and troughs, they have come in at key Lucas numbers, not exact, but some of them were just off by, let's say, a couple of weeks, etc. The major high came in March when we had this 152 number hit. Now we had September as a key month coming in, because if we add 7 to the high that was there in 152, we get to September. Now, if the market remains weak in this September, just the way it is, we don't see new highs coming in, or at least the Bitcoin getting stronger, then I think we move to another cycle of 7 months. So 7 plus 7 will be 14 from the March highs. That will then take us to March of 2025. So really key what is happening here in Bitcoin at the moment. And if I just move to the Bitcoin chart, here we go. Yeah, let's actually use this one. Here we go. So that's several ABCDs that come around this 52,000 level. But if that goes away, 52,000, let me do it on the other chart. This is the one. Here we go. You can see there are several ABCDs which are completing, but if this 50,000, let's say, it's broken to the downside, we could see a fair amount of correction further down to maybe around 3,500, 40,000, 3,500 in 35,000 in Bitcoin. So you can see that it's just been a trading range affair since March. That's when the Lucas time spiral called a high. So if there's going to be a weakness in the Bitcoin, I believe it will also get reflected into the US stock market. So keep on watching, look up for the video on Sunday that will be posted. We'll go and do a deeper dive for the stock indices. and we'll take a look at from a technical perspective the kind of key levels. We do have a key date coming up on the 10th of September. There's a possibility we'll see some sort of a bounce bottom forming around that period time frame, and we can see actually a pretty good rally actually from those levels around that key date of 10th of September. So I would expect actually the market to be putting in some sort of a low around that time period, and we could see a pretty good and impressive looking rally coming up at least in the NASDAQ 100 and S&P 500 indices. So thank you very much for watching the video. Good luck, good trading, and speak to you guys soon.